Thank you, Alma. Listen, we have here Brian Shanon, and obviously I'm going to introduce him, but I'm also going to tell you guys, back in 1999, I met him when he was working with another people. He's been in the market for quite long time, like myself. And obviously, I always was fascinated with the technical analysis, because remember, in terms of the technical analysis, it's not only about the typical patterns that you are seeing, but obviously how you can really evolve with what is happening right now in regards of the opportunity to find those tops and bottoms in the market. And that's extremely important, because as you can imagine, it would allow us to understand where are those areas that are important. I'm gonna basically allow him to speak, but the first question before we go to anywhere, Brian, is we regain the 50 days moving average, and I think was the 200 as well in the S&P and the NASDAQ. And you're an expert, so now explain us what to expect based on all the analysis you know how to do. And thank you for coming, Brian. I appreciate that.
My pleasure, Victor, and nice to see you again. It's been a while, as you said, 26 years, I guess. So, yes. Yeah, so I've been, that's been my passion, is technical analysis in the market, which is because I'm a trader. And as a trader whose emphasis is on the short to intermediate term time frame, and I'll tell you my definition of that. A swing trade can generally be a couple days to maybe a couple of weeks long. And as you said, trying to get out when things get negative, I don't really like to call tops and bottoms. I did a great job of getting out of this market when trouble came, but the V bottom that we saw here was pretty tricky in that I didn't have a lot of trust for it. So I've been underperforming on the way up here simply because I've been trading smaller share size. I'm still well ahead of the market because I didn't lose money on the way down, and I'm making less on the way up, but that puts me well ahead with less risk-adjusted performance as well. So what? Yeah. Yeah, so what we were doing, you mentioned the 50-day moving average, you mentioned the 200-day moving average. And when we look at the market, generally speaking, Paul Tudor Jones was known for saying nothing good happens below the 200-day moving average. Well, we just saw a 21% rally below the 200-day moving average. So someone thinks something good happened there. What we're supposed to see on the way up is levels of resistance. Prior support tends to act as resistance. That's the way it is in the textbooks. And it's tends to is the key word. I always call them, okay, we're approaching a level of interest, the 50-day moving average. That means we want to watch carefully to see if there is in fact resistance here. But if the market continues to go through it, we can't stubbornly, sell our longs or start getting short and say, technical analysis doesn't work. We've got to go with the shorter term time frame. And again, that's my focus. So I'm down to a five-day moving average is my main benchmark of what the trend is.
So listen, if you see that, and let me explain this interesting topic to see if I get it so the audience can get it. You see a V-shaped recovery, but you normally see that the V-shaped recovery, when you are in the little part of the V, the uptrend might be coming slowly. You never see that V-shape under the 200 moving days average. Question is, now we are in this, let's say, time where, unfortunately, unless there is coming more deals out of other countries, that include Canada and obviously up to some point the European Union and Japan and India, markets might take something back, because if you see the earning per share and the multiples on the S&P 500, I think there is overvalue at this time, unless there is something better in the outlook for companies that are not giving guidance. That being said, where do you see the market retracing? Do you think that we're going to break the low, as Paul Tudor Jones says, I think at the beginning of the week, or you think that we might find some area again in the 5,500, which was the previous top that people was talking about?
You know, I like that 5,500 level, Victor, and I look at the SPY, which is, 550. Right now, we have the 20 and the 50-day moving average in there, and we have the anchored volume-weighted average price from the all-time high in that area. I'd love to see a pullback in there. As I said, I've had smaller share size than I wanted to, given the nature of this rally, but I didn't see it coming at this magnitude. So a pullback down towards that level would create a nice higher low if it holds, and then from there, we can continue to launch higher. Now, the test of the lows, I think, becomes less likely the higher we are up from it, now that we're so far extended. So if we do completely fall back apart, we're going to have to undercut the 20-day moving average, the 50-day moving average, the 200-day moving average. So instead, where we have that prior level, that 550 on the SPY, that is ideally going to find support. So it's a big level of interest where I'm going to be looking at it if we pull back down to there, say, okay, now I'm looking for evidence that the buyers are gaining control, and as it starts to bounce from there, then I want to get involved on the long side aggressively. I don't want to buy the dip because that just leaves me exposed, and maybe it does continue down. As I can't argue with Paul Tudor Jones. His track record's certainly better than mine.
Listen, you're right, but he have also a lot of marketing dollars behind that, because I bet you that he's a great guy, but none of us know exactly what's going on in the market in certain times. Question. The question is, now that I get you here in this interview to educate us, what do you think it will be the leading indicator these days that have a better correlation to kind of have some sort of forecast of the market? Is any of the Magnificent Seven? You're seeing Tesla or NVIDIA basically leading? Remember that it's extremely important, and you got to correct me if not, that some companies tend to move before the index, right, and kind of lead us to the direction. If that's the case, what are your other indicators, not the index per se, that are basically telling you where might be going in the event that there is any leading indicator in this case, please?
Yeah, and for me, it's always about price action, Victor, but you make an important point that, the Mag 7s and the tech leaders have gotten up off the mat, and they're performing better. Apple and Google are the notable laggards so far, but we're actually really in a great time. We're coming towards the end of the earnings cycle for this quarter. And what we often see is that the companies that report earnings that are better than expected, companies that provide guidance that say, hey, we're not going to be hurt by the tariffs or whatever it might be, people will start to pile into those names. And you can see stocks like Robinhood, like Roblox, like Palantir that are leading the way, HIMS leading the way after earnings reports. So that tells me there's likely to be an institutional bid in those stocks because they're the favored ones fundamentally. So when I see that new crop of leading stocks emerge with solid fundamentals behind it, then I drill down to the charts and look for the key levels where I can hopefully identify a low risk, high probability setup to get involved as those trends continue higher on multiple timeframes.
And the other thing that I need to ask you now that we get you here is, okay, you have Alphatrends. You basically have some sort of research services for the smaller traders, and obviously they are looking for not only your expertise on technical analysis, but also the new ways where you approach those kind of indicators. So I need to ask you about the Bitcoin, because obviously, you remember back in the days when you and I were back in the Realtic era and Terra Nova, market-wise, none of this existed. Now the technology has been moving super fast, and I think that people need to start paying attention to the digital assets more than anything, because it might be a cascade of people allocating up to some point. So do you like the Bitcoin at this level? Do you think, based on price action, obviously we don't want to enter into the validity of the asset class, but what do you think about that? Because obviously we see a comeback from 105, 104 and change, but there is people saying we might go to 120 if we keep going higher on the S&P.
Bitcoin has performed really well. We had that deep pullback down towards 72 or so and rocketed higher from there. I kind of thought we were going to continue down towards about 70,000. Instead, we turned higher. I'm long a small amount of that. I've got a better position in Ethereum. But, as you said, Victor, these things didn't exist before. And the nice thing about the crypto assets is they don't really have fundamentals. So we don't have to worry about earnings reports, earnings upgrades and downgrades, that they tend to trade a lot more cleanly on technical analysis. So they really lend themselves well to that. For obviously the hodlers, the people who just think that it's going to be the next digital, that it's going to be the next currency and go to $1 million per coin, maybe it does. I don't make those type of projections, but right now the momentum is higher, and I think as long as in the near term we hold probably about above 98,000 or so, you continue to give the benefit of the doubt to the buyers, and I don't see a reason at all why we couldn't see 120 or higher.
Listen, you do a lot of these interviews and events. I got to tell to the audience, everybody knows Brian Shanon. And I need to ask Brian Shanon, okay, Brian, let's say there is a trade out there. Where do you put the money if you have to for the next 30 days? You just wait for the pullback? Or if you have to put the money to work right now, there is any ideas where you feel comfortable putting money to work for the, let's say, short to mid-term right now, May 14?
It's tough. We're getting extended on a lot of these names. So I'm just looking down at my list. CMG looks interesting to me. That one, in any stock that I mentioned here, I think you've got to look at it and say, 5 to 7% downside maximum risk. CMG got a little extended here today. I like the way Reddit is setting up, RDDT. So I'll give you those two names for now. And actually, I'll throw you another one, Stratasys, which is a 3D printing company, SSYS.
Listen, we're going to bring you probably in the next few weeks. You're going to be contributing with us in Espanol. As you know, we are the #1 TV station in Espanol in finance. And not only that, we now, and let me brag a little bit, we are now basically covering everything from the New York Stock Exchange, the first TV station in Espanol doing that. So definitely, I'm looking forward to bring you back. Thank you for the time. Thank you for the explanation. And I'm going to make sure we follow those three names, okay?
Sounds good. Thank you so much, Victor.